Empty pockets never held anyone back. Only empty heads and empty hearts can do that. Norman Vincent Peale. My friends, it's all about what you are willing to dedicate yourself to. Are you willing to spend 10 to 15 minutes here with us every day to review these charts, to learn what they have to teach you, to follow price movement, and not pay attention to all the other little baubles, twinkly things, sparkles that try to grab your attention? That is the reason we discourage you from spending a lot of time listening to the financial news media. You will hear the exact opposite 1 hour after you hear the first way the market's going to move. So again, all that matters is price movement. Let's jump into these charts. Oh, Patreon members, this next Wednesday, which is the 8th of July, we will have our live question and answer call-in session. If not a Patreon member, sign up and become one. You can join us live for that training, also exclusive to Patreon members only. And Accelerated Market Mastery is just about full. We're just about to cut it off. If you are interested in the program, follow the link in the show notes. It'll tell you all about it. And again, we do personal interviews with everyone to see if they are right for the course. And it will be starting very soon also. So look for the link in the show notes. You'll see that. And I just sent out a whole bunch of books today, a big batch of the second printing of the second edition, Charting Your Way to Wealth. Thank you for everyone for all your support. Let's get going. Remember, markets are closed in the States tomorrow, Friday. So this is our comprehensive review and forecast. We're doing it on Thursday. Let's look at what is going on. Well, we see on the S&P 500, we see everything up for the day except for real estate, down 0.29%. But let's jump into our S&P 500. What do we see? Well, we can see where this market peaked again all the way back on the 12th, Friday the 12th of June. That is where it peaked, and it's been sliding sideways since then as far as the Heikin-Ashi candlesticks go. We look at the price percent oscillator, which is our main indicator, and it slid sideways for 2 weeks. But over the course of this last week, it has been angling up, pushing through yet again the 200 period moving exponential, moving average line. Derivative oscillator, leading indicator, still losing momentum. All important price percent oscillator, however, is moving up. We go to the 2-day chart. It's still in negative territory as far as the price percent oscillator goes. The prior 2-day candle representing Monday and Tuesday of this week, that was the 29th and 30th of June, was a green spinning top. This latest one is a green up candle, pushing through the 2-day trend line, but it's still negative. Derivative oscillator still negative, losing downward momentum. Half-day chart, it crossed over in the morning back on, afternoon on Tuesday, the 30th of June, then sort of leveled out at the end of the day on Thursday. So we're still just watching, waiting, seeing what there is to learn here. You may have a 2-day recross that might give you a jumping in point on the S&P 500 over the course of this next week. Put that in your show notes. Note that, and we'll continue to watch, see what there is to learn here. What about the Qs, the Nasdaq 100? My gosh, folks, it just keeps going up, doesn't it? Reaching higher highs, moving up higher. The tech stocks sort of was flattening out over a 2-week period, but over the course of this last week, it has shot up again. Now, the leading indicator, the derivative oscillator, is still losing some momentum. Price percent oscillator has a wick on the bottom. The Heikin-Ashi candlestick has a wick on the bottom. Price percent oscillator is heading up. Now, we go from the weekly to the 2-day. And again, not quite a crossover, just didn't get a 2-day recross yet. Means we'll have to keep our powder dry, see what happens on Tuesday and Wednesday. What is that telling you? That there's not enough momentum to have it recross going up? Well, that's important to pay attention to, particularly to see how the new week starts off. Price is still above the weekly trend line on the 2-day chart, but see, it's still in a confirmed down move itself. So We'll watch, see what there is to see, what there is to learn. We look at the half-day chart. We see up in the morning and dropping off in the afternoon. Price percent oscillator still heading up, losing some energy. Derivative oscillator gaining upward momentum. So that's where we are on stocks. We're going to pay close attention to two-day recrosses going up over the course of this next week. Note that in your show notes for the S&P 500 and for the Nasdaq 100. Let's go into bonds. Into the day up 1.10%, so 1/10 of 1%. And look at bonds, still don't have enough energy to cross over going up. We see that the price percent oscillator is edging ever so slightly down. Derivative oscillators negative, losing downward momentum. And we have the third green open box candle. It pushed through last week, if you will remember, the weekly trend line. But the weekly trend on our price percent oscillator, all important indicators, still down. We see that the two-day chart crossed over going up last Friday, and then it sort of lost some energy. Still going up, questioning whether or not it's going to cross over going down over the course of this next week and give you the ability to jump into a two-day recross going down. Put that in your show notes. Watch for that. Pay attention to that over the course of the next week. Do note that the two-day chart is above the weekly trend line. It'd be interesting to see if we have a crossover going down, crossing through the weekly at the same time, give you some idea as to momentum and energy going down. Look at the derivative oscillator too. It's lost a little bit of momentum and we have a solid red down candle. Not a big one. No wick on top, wick on the bottom, which is also important. What do we see in the morning on Thursday? Well, we see a red spinning top, lots of down movement, and then a bit of a recovery in the afternoon. That's what made that 0.10%. So again, watch those things. Pay attention to, again, another potential two-day recross, this time in the down direction. And of course, what's the inverse chart? That is TBF. If you don't know what we're talking about, inverse funds, we've got a great training. I'm going to actually put that at the end of today's program for you. Now, let's keep moving. We're going to go back to our weekly chart. We're going to go to gold, last of our big four charts before we get into real estate, Bitcoin, which didn't do anything today, and USO, which is oil. So what do we see happening on gold? Gold up 0.22%. You know, gold really has given us a problem lately. It crossed over going down back there at the beginning of June, didn't do anything but slide sideways and then up, and then crossed over ever so slightly going up at the end of last week. We do have an up week so far. It's okay, nothing to write home about, but we have a green up candle. The price percent oscillator is just barely over the red signal line. Derivative oscillators positive. Go to the two-day chart. We can see things pulling away a little more there. We have a laminated two-day crossover and weekly crossover. They both occurred last Friday, the 26th of June. We had a green up candle following that, representing Monday and Tuesday. And then Wednesday and Thursday, a red open box spinning top, which again is a slowdown in the up movement. Price percent oscillator, like we said, still positive. Derivative oscillator gaining upward momentum. Half-day chart, not much going on in the morning on Thursday, but went up in the afternoon a little bit, like we said, 0.22%. The derivative oscillator still negative, gaining downward momentum on that half-day chart. Price percent oscillator still negative too. That's where we are as far as gold goes. How high will gold go? Gold is sort of lackadaisical, but we have that weekly vertical crossover in effect. We'll see how well it works for us. Now, let's go into Bitcoin. Nothing going on Bitcoin as far as just flat. We see that the price percent oscillator is about flat itself on the weekly chart. Derivative oscillator losing upward momentum. Two-day chart, we can see that a green spinning top here. Well, is that even a spinning top? It's just a little green open box candle, which again is all right. But the price percent oscillator still heading down, derivative oscillator heading down. Now remember, that weekly chart is weak as it is. Two-day chart's going down. So again, waiting to see how Bitcoin's going to sort out. Are you going to be looking to short Bitcoin in your practice trades or go long? It really depends on if the 2-day pulls the weekly over or if the weekly pulls the 2-day over. We'll just wait and see. We look at the half-day chart, and of course it crossed over going up. Well, right there in the morning, I guess, on Wednesday, up a little more in the afternoon, and then a sideways slide. So we got nothing to report as far as any gain at the end of the day on Bitcoin on Thursday. Now we go to real estate. Make sure we start with the weekly. Look at real estate. It popped up and hit its recent high back on mid-June, Friday the 12th of June, and then sort of angling down since then, well, for 2 weeks, and then this last week a green spinning top, indecision tending up. Price percent oscillator kicked up a little bit. Derivative oscillator still losing upward momentum. 2-day chart, it's still negative. Will you get a 2-day recross over the course of this next week that might give you the ability to jump into some kind of up move on real estate in a practice trade? Maybe. Half-day chart popped up in the morning and then leveled off, lost some in the afternoon. Price percent oscillator still heading up. Derivative oscillator about flat. And for the day, looks like it's hard for me to read. I think it's 0.29 is what the real estate index was down. And again, this is the Vanguard Real Estate Investment Trust Exchange Traded Fund, the biggest one in the world. So we'll continue to watch real estate, see just what it does. Now, what about oil? How did we end the day? What did we tell you to pay attention to if you wanted to track oil? Was it going to cross over going up? It did. It ended the day crossing over going up. Did any of you mark your calendars and get in there and purchase a practice trade on USO for your paper trading there at the end of the day on Thursday? Now, hopefully, if you were interested in oil, you did, and you're going to be able to track that and see how that works. You see the derivative oscillator gaining upward momentum. Price percent oscillator is confirmed. Again, remember, markets are closed on Friday in the States. Look at the 2-day chart. It's heading up. As far as the price percent oscillator and derivative oscillator goes, again, you can see where things are as far as a green up candle goes. Half-day chart. We also had it crossover going up in the morning. So we'll see. How far will oil head up? How successful will this be? Not my favorite chart. I've made that very clear. Some real sloppy areas last year. But we do have a crossover on the weekly chart, and we will help you follow and track that. You asked me to do this for you. I'm doing what you ask. That's where we are, folks, as we end the day. Hope everybody in the States has a great 4th of July holiday. Remember, markets are closed on Friday. They will open back up again on Monday in all earnest. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.